This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Daniel O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute, start today's show as they discuss the feed grains market for the United States and worldwide. Guy also comments on his time in Canada, the U.S. dollar, and freight. The show and conversation continue with Daniel O'Brien and Guy Allen as they chat about the soybean and wheat markets. K-State meteorologist Chip Redmond concludes the show highlighting the warmer than average temperatures and lack of moisture. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Daniel, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
With having Daniel and Guy on, we just had a recent WASDE report, so wanting to look at things domestically and internationally. And first, starting off with our feed grains, corn and grain sorghum. Daniel, what are we seeing?
Really, the news that came out of that WASDE report with regard to the, again, major feed grains that we're watching, be corn and grain sorghum, would be the USDA coming in and bringing a sharp increase on their projection of U.S. corn exports. And so they raised that number, and that was the only number in their balance sheet that they changed for corn, from 3.075 billion bushels up to a record high of 3.2 billion. And as that had an impact on the balance sheet, that 125 million bushel increase in usage dropped ending stocks down to just still above 2 billion bushels, to 2.029 billion, and stocks to use down moderately, still about 12.5%. No change in the projected price of $4, et cetera. And on the and the response of the market to that has been kind of slightly positive, 2 or 3 cents a day to the positive side. Certainly not in a free fall, anything like that. So that's positive, and and you see evidence of this, of that increase that's probably supporting what the USDA is seeing as they look at the pace of exports that we've had since in the slow release of information coming out of the government shutdown. The latest numbers we have are for November the 13th, so still about 3 weeks late. But U.S. exports that week of about 97.5 million bushels need a pace of, even with the new 3.2 billion bushel projection of usage, need a pace of about 64 million bushels a week to meet the USDA's numbers. So we need to export with these new, even with the 3.2 billion, need to export about 64 million bushels, and we came in at 97.5. So it just bears more scrutiny. And Guy, when we throw this to the international side, I'm going to ask you, so where's that going? I think it's going to Mexico and other places, Mexico, the European Union. But let me quick. We'll tie grain sorghum in, and then Guy, we're going to put feed grains in your lap. The grain sorghum numbers also are showing a little bit more life, certainly more life than we had prior to the U.S.-China trade negotiations that I ask you to comment on, Guy. For the week ending November the 13th, we were up to about 3.35 million bushels a week. Need a pace of still about 5.3, meet the USDA's projections. So I've been looking at, and I think Guy and I watched cash markets and basis levels quite a bit, and you're seeing periodic really healthy bids that stand out in say parts of South Central Kansas, to where somebody's probably filling trains or something like that amongst the major terminals, and had seen one of those last week. And now this week it's not so much there again, but that's kind of where we're at as we start pulling this in. And Guy, to set you up on the international side, I think one issue that's that came out of this report that almost nobody's looking at, kind of the sneaky fact that really bears attention, is that for the world corn supply demand numbers, as you look at the ending stocks to use, down to about 18.6% stocks to use on the world side, down 2% just from the November report, and a 2% change in stocks to use at the world level is a big thing. If you adjust for world minus China stocks, we're down now below 9%. We're to 8.9% stocks to use. Last year we were 10.8. Dropped this number 1% plus from that last report. So there's something afoot in the world corn market. So you see the U.S. stocks to use still at strong highs, but yet on the world side we're tightening up. Guy, I throw that over to you. Do you have any thoughts on that?
Yeah, just the biggest question is sort of where's this export from the U.S. going to? And I think Mexico's your best opportunity there. Seeing good demand. No, we're running a record export pace so far this year for U.S. corn, which is a good thing. And as you say, it's tightening up these ending stocks. And I think Mexico destination for both corn and sorghum is looking very, very good this year. As you said, the world ending stock situation, while world ending stocks were up slightly, about 2 million metric tons from November at 279 million metric tons, they are down about 14 million metric tons from last year. And that's definitely being reflected in those ending stocks to use numbers that we're looking at today. Looking at your numbers that you've done calculated this week, Dan, we like to work at that world less China number. It's dropped from 10.8% down to 8.9%, and that's getting it fairly tight. Well, if you look at the U.S. numbers going up slightly from 10.1% to 12.5%, that actually sort of surprised me a bit, but we do have a bit more cushion in there to actually export a bit more. But at this, already at a record pace, you'd be a bit hesitant to put a bit higher, but the USDA did move it a bit higher. So I think, having more exports coming from the U.S. As we work through this current marketing year is optimistic, is good, and if we see that actually occur, that should lend itself to supporting corn prices. The other thing to mention on corn, with this sort of tightness compared to the other commodities of wheat and soybeans, corn again has the opportunity to lead the prices higher, particularly for wheat. It's going to lead that situation.
While we're talking about the international market, Guy, you're currently in Canada, and as you're there, what are you hearing, seeing, thinking, feeling from our neighbors to the north?
Yeah, I was up in Toronto this week talking to the Ontario grain farmers. They have very similar concerns to their neighbors here in the U.S. They're very concerned about trade. They continue to be concerned about tariffs and just their cost of production. So very, very similar concerns across the board there. It was, very, very much a grower meeting that I had the opportunity to speak to. China, again, is a concern. They've sort of come back into the market for their oil seeds. But, and some of them, they keep watching this Australia dollar has been fairly weak, which is lending support to their commodity prices a bit since they're operating in Canadian dollars. But it is actually significantly raising their input costs, particularly on those things that they import.
You mentioned the dollar. What are we seeing for the U.S. dollar?
Looking at since the WASI report, the U.S. dollar situation has actually come down a bit since
there was a Fed announcement that probably came into that, isn't that right?
Yes. That's the Fed did lower their interest rates by a quarter of a point here on Wednesday. That was on Wednesday, wasn't it, Dan?
Yes.
Which that the market closed weaker on that day with that Fed announcement. It wasn't unexpected. It was pretty much, I think, in the market, but and then it's dropped down from just being right at 99 the end of last week. It was up a bit earlier in the week, but at the moment it's trading at just above 98, 98.3. Again, keep in mind that index is very much influenced by the U.S. trade against the euro, and second in there is the Japanese yen. So, but the drop in the interest rates, I think that's a good thing. That'll actually help a number of our primary customers be a bit more competitive as their values have likely increased a bit against the U.S. dollar. So again, should support those export numbers. The other thing I wanted to touch base on was the dry bulk costs for international ocean freight. Just what we've seen since last month, we've seen the cost of dry bulk freight go up a bit, but in the last couple days, it has backed off from a couple month high in there, which is good. But cost of dry bulk shipping has gone up. Again, what's driving that is strength we're seeing in both iron ore and coal purchases, particularly going into China and the Far East.
Yeah, when you're looking at all these international market indicators and what could be impacting it, any surprises?
Well, surprise might be too strong of a word. It's sort of moving at pace. Probably the biggest surprise has been is coming in these core numbers and the good exports on that. Now, it's to talk about it's one thing and expect it, but actually see it getting shipped, it sort of confirms those expectations. And that's having seen that, particularly in the corn and the feed grains, is what really maintains my optimism for the other commodities as well.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by the senior economist at the IGP Institute, Guy Allen, and K-State grain economist Daniel O'Brien as we continue our grain market conversation discussing soybeans and wheat. You're tuned back into Agriculture Today, and we continue our show and conversation about the grain market with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Last segment, we talked about feed grains being corn and grain sorghum, and so this time, starting off with soybeans, Daniel, what are we seeing domestically?
Well, in terms of what came out of that USDA WASDE report on the 9th of December, no changes in the new crop 25-26 supply demand balance sheet, still at 290 million bushels for ending stocks, although the market had expected that to go up about 10 million bushels, but it didn't. No changes in crush, still 2.55 billion. And really maybe the news is that number, 2.555 billion bushels for this marketing year, is up from 2.45 last marketing year, and from 2.29 billion bushels 2 years ago. So domestic crush is strong. And but what's been weakening, and Guy, we might want to comment on this later, we are down now to 1.635 billion bushels projected for U.S. exports. And we were at 1.88 billion bushels last year, 1.7 billion bushels a year before that. So you've got the tale of two different trends in terms of where U.S. soybeans are going. The domestic crush number strong, going higher. I guess the prospect of continued weakness in U.S. soybean exports in 25-26. That could all change, of course, if there are any crop problems in South America, Brazil, Argentina, Paraguay, any of those places. But so far, nothing's come to bear. Stocks to use now. Again, 2 years ago at 8.3% stocks to use, 7.1 last year, now projected to 6.7 this year. Prices projected to be about $10.50. You can bring that back to a Kansas-based situation. We're seeing Kansas cash prices, of course, out to the west below $10, about $9.90, $9.94, something like that. Over $10 in Salina, about $10.20. Salina, Pittsburgh, Hutchinson, and a little bit higher in Topeka. So the pace of exports, again, we're playing the same catch-up market information situation that we had been seeing for corn, showing up somewhat in soybeans. Here had a week of 57 million bushels on November the 13th. Again, that's the last info we've got as we keep catching up from the from the government shutdown, need a pace about 46.8, 46.9 to meet the USDA's projection. But admittedly, it's a lower projection. So just interesting to watch. I think, Guy, you and I were talking before we came on the air about the, I guess, the prevalence of China, preference and prevalence of them buying Brazilian soybeans or Argentine soybeans, wherever they can get them, other than from the United States. But again, a lot of that was happening because of one factor being the U.S.-China trade negotiations. Now we've come out of that, and strong statements and some actions by China to come in and buy U.S. beans. So interesting to see how that develops. Guy, as you watch the international markets, what do you see going on there?
Yeah, look, not a lot of big changes there, just some subtle ones there. As you talk, the stocks to use ratio a bit tighter, but ending stocks increase, just under 500,000 metric tons, but slightly less than last year. Main exporter production at 237 million metric tons, just slightly above last year. So not a lot of changes on that. Probably the most frustrating thing in the soybean situation is Chinese buying patterns. They don't really behave. They're not behaving as an economically rational importer. A lot of politics coming into that. There for about 8 to 10 months, they were paying a significant premium for Brazilian soybeans over the U.S. as they were playing politics and remaining absent from the U.S. market. When they did come in to buy some U.S. Soybeans, they were paying about $1 additional CNF above Argentine supplies. So from an economic point of view, it's quite frustrating when your primary importer isn't behaving in an economically rational manner on that. So it just really complicates the situation. Just to come back to your Mexico is in that trade matrix, has increased their imports a bit there as well. The real key, good demand we're seeing on the oil side of things. And last year, export pace for soybean oil was surprisingly strong. The one that's going to remain a challenge is this surplus of soybean meal that we produce. And from prices have been fairly low on soybean meal as it tries to price in demand. The challenge for soybean oil across that whole protein complex is soybean meal basically is the base commodity for pricing that commodity complex. The other proteins trade as a bit of a spread off of that. And when we move the price of soybean meal lower or any direction, it changes the whole price base for the whole protein complex. So we still have good competition from other protein alternatives, particularly when we're looking at corn and the large ethanol grind and the volume of DDGs that are going to be coming there to market. And that competes with soybean meal internationally in that whole protein complex via different sectors, more so in the beef and dairy sectors than so much in the poultry.
And our last commodity to touch on for today, wheat. Starting off domestically, Daniel, what are we seeing?
That again, whereas the overall U.S. world wheat supply demand situation and wheat exports is struggling some still as we watch the hard red winter wheat export numbers, they're really pretty healthy. Again, November 13th is the last set of numbers we have, most recent set for that week ending, again, November 13th, 6.7 million bushels of hard red winter wheat exports. Of course, that's during a time of really low prices. And in this case, probably, Guy, we're seeing the old economic maxim or ad hoc maxim that the best cure for low prices must be low prices, because we are selling a fair amount of hard red winter wheat. Need a pace of about 5.3 million bushels a week to meet the USDA's projection, 325 million. And again, we had 6.6 that week. I guess for Guy and I, we'll be watching to see what happens to hard red as we keep going forward. I would say that just to keep that in perspective, for all U.S. wheat exports, USDA's latest projection was for 325 million of hard red exports, 230 million, again, 105 million less for hard red spring in second. In white wheat, 200 million, again, that was up a little bit, about 120 million for soft red winter, and for durum at 25, in total for 900. So interesting to see the predominant supply availability position of hard red, and how I guess this month we're looking at a pretty good situation for hard red moving. The overall supply demand balance sheet for wheat had no changes whatsoever. Whatever changes happened underneath the totals were offsetting. 43.9% stocks to use this year for overall U.S. wheat, $5 price, and you just compare that to the last 2 years. We're kind of in a classic oversupply situation, low prices. So 2 years ago, about 43.9. This year, we were 43. Last year, for that price of 552, was a little bit higher. And then 2 years ago, we were at 38.4% stocks to use and a price of 696. And that was part of that was kind of a residual carryover from the Ukraine-Russia war, et cetera. Prices generally coming down. But so, Guy, it's hard to generate lots of optimism on the domestic side for wheat. What do you see on the international side?
Well, the international side, this is probably the most bearish part of the WASDE report that I read. World production on wheat's pegged. It was already at a record number. They increased it by nearly 9 million metric tons to 837 million metric tons. Again, a new record world wheat production. It's just going to make it hard for U.S. exports to compete in there. So far, they've been pretty respectable, but I don't know if we can continue to maintain that. And your ending stocks to use number really reflect that. Look, we're looking at world stocks to use up again at 33.2. U.S. is up almost to 44%. We're just awash with wheat and need to find demand. But going through this various countries, they increase Australia's wheat number by 1 million metric tons, as well as their exports by that same number, and that'll be near a record. Argentina crop up 2 million metric tons to a record 24 versus 18.5 last year. Again, they're raising their exports. Russia production at 87.5, up 1 million metric tons, although they did leave Russia exports unchanged. Ukraine basically unchanged, but the EU was up 1.7 million metric tons to 144 million metric tons. Canada production, again, up 3 million metric tons to the north here, and with exports up 1 million metric tons, and could even be bigger on that. The disappointing thing is China's estimated imports unchanged at 6 million metric tons. They have a reasonable crop there, but I don't think we're going to get any joy out of China in the wheat situation. It's going to be tough for the wheat situation as we're the ending stock. The one thing that might support that is if we see stronger corn prices, we should see more wheat feeding in a number of places around the world, not just in the U.S. here as well. So as I said earlier, corn's going to be important to sort of leading any sort of strength we see there in wheat as well.
That was a senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now, but stick around because we have more for you up ahead. You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, this past week, it feels like we've had really nice weather in Kansas, and so does that mean we've been above average for temperatures?
Yeah, if we're talking nice weather in Kansas in the wintertime, most likely the temperatures are going to be above normal. We were running about 15-ish to 20 degrees above normal in most places. That was to start the week. We had a brief cool down there on Wednesday that at least a little bit more seasonable temperatures in the 40s, which that's where we should be. We should be about that 40-degree mark or so. However, we did have that cooler air on Wednesday was following a pretty impactful front that a lot of people took notice of that came through Tuesday night and Wednesday morning where the winds really picked up. Not out of the ordinary. We could see a frontal passage at night and you see the winds pick up, but they picked up a lot. We had wind gusts up to near 50 miles an hour at multiple sites throughout northern Kansas. And just a result of a strong, potent air mass, and that created a big enough gradient that we're able to mix those winds down. A lot of times you see those frontal passages kind of slide through quietly without an increase in winds because we typically have more stable air at night. So We are seeing cold frontal passages, and sometimes it is uncomfortable, but overall, yes, very pleasant weather for December.
Are we going to continue with this weather pattern?
Frontal passage came through Thursday night, early Friday morning, so temperatures are falling. It's going to be much colder today on Friday than we were on Thursday, especially, and the temperatures struggling to get to the 40-degree mark, and they're going to fall throughout the day, and that's going to be the tone. Cooler weather for the weekend with this cold air mass coming in from the north. We've been on the southern side of a very active jet stream that basically expands from the Pacific Northwest, where they've been getting really, really active weather with heavy rain. Some places have measured 10 plus inches of rain, even more so in the mountains, and they got flooding issues. That overall pattern cuts across the northern plains, does come south a little bit into Nebraska, and then shoots off to the east and goes into the northeastern United States. And so what that's done is kept all that cold air pent up north of that jet stream. And we're observing right now a brief dip in it for this weekend. It allows some of those cold air. And it is cold air up there. They've got snowpacks in some of those areas have received quite a bit of snow, especially from Iowa to South Dakota and eastward. That snow modifies the air above it, so you get a lot of cold air. And then when we have these fronts come through, they're able to tap into that cold air and bring it southward. However, a lot of warm air to our south and west, and it's just a matter of time till that jet stream shifts back northward just ever so slightly and allows that warm, drier air to come northward again. And we're going to see that early next week where temperatures are going to jump back up to above normal. And keep in mind this weekend, it's going to be cold, but not extremely cold. Our record lows are in the negative teens. We're going to see highs struggle to get to the 30-degree mark, especially on Sunday, and lows. They're going to get down into the single digits most likely, but we're going to warm right back up early next week. We'll get back up to those 50s. That jet stream kind of keeps taking that same frequent path. And when we look at the grand scheme of things, classic La Nina weather pattern with high pressure across the southwest, warm, dry conditions extending there and eastward into the southern plains. And we kind of find ourselves on that northern threshold. And that's what's going on right now in the East Pacific. We have a La Nina pattern. And honestly, looking out into the future, I don't really see when this pattern breaks. We keep warmer weather really through most of next week into the weekend before Christmas. And there's some hints maybe we'll see another dip in the jet stream there right before Christmas. That might bring some cooler air, but overall, we're looking at a moisture-starved atmosphere. Most of our flow is from the northwest. It brings in these cirrus clouds, gives us some really pretty sunrises and sunsets. But overall, doesn't bring in any of that mid-level moisture or low-level moisture we need to get precipitation. And I honestly would not be surprised to see most of the state go the rest of the month without measuring precipitation until we can find a way to break this pattern. And I don't really see anything, at least the next couple of weeks.
Chip, I appreciate you taking the time to join us.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.